$1,000 account, you cannot expect to pay your bills or live off of it. But what you could expect is maybe doubling this account and then tripling it and then so on in the future. A lot of good traders out there, they do $1,000 challenges. They take it to 10,000 within 2-3 months. It's possible. A lot of people have done it. I have done it many times. Now, if you have $1,000 account or even a $5,000 account, first thing that you want to ask yourself, what exactly is your goal? What are you trying to achieve with this account? Are you trying to make on $1,000? Are you trying to make 20% a month? Right? Are you trying to make double this account in 6 months? Are you trying to double this account in 1 year? I don't know. That's your goal, what you're trying to do. For most people, if they have a 100K account and I told them you can make $5,000 every month in this market, is very possible, and you could do it safely by managing your risk. And these guys will be happy. Just making 5% on 100K, that's a lot of money. But 5% on 1,000, that's only $50 a month. So you can't really sustain. I mean, you probably wouldn't trade just to make $50 a month. So on $1,000, your goal is probably at least to make $200 to $300 every month until your account grows. And then eventually after 6 months, you might have 2,500, 3,000, maybe 5,000, depending on the types of trades that you hit. But here I'll speak about the minimum, which is possible, which you should be doing if you're managing your risk. Okay. So one thing that you want to ask yourself, what exactly is your goal with this account? Why? Because your goal will determine your risk level or the tolerance that you have in the market, right? Now, if you're telling me, if you have $1,000 account and let's say tomorrow you lose $100, are you okay with losing this $100 in a trade? If this $100 is going to bother you that, oh my God, I lost my $100 in the market, I only have $900 left, you're probably in the wrong industry. You probably shouldn't be in trading, because this is the reality of trading. You will lose this $100. Many traders first will lose money before their account grows, right? That's just how the market works. Is your risk, are you okay with losing this 100? If yes, great, right? Next time, let's say your account goes to $700. Are you okay with it? Are you not okay with it? Is this going to bother you? Are the emotions going to kick in? If yes, again, you're in the wrong business. But now, based on this, if you were okay losing this $100, your trading style will be different. If you were not okay with losing this $100, your trading style will be different. Why do I say this? Okay, so let's go on this right now. If you're okay with losing $100, your trading style, you can do more scalps. You can do more scalps. Why? Because you're okay with losing $100. You're not worried about it. You will be okay with $900 at the end of the day. You're okay playing shorter dated positions with high risk. Okay. With high risk. And if you're not okay losing these $100, you cannot scalp the market. Don't try it. If you do it, you might double your money. You might triple it. But it's not something that I recommend that you do, because you're not okay losing $100. In a scalp, it is very likely that you will go in a loss. Now, what you want to do, if you're, depending on your risk tolerance level, if you have low risk tolerance level here with your small accounts, I always mention this: buy time in the markets. By buying time, you don't lose your money right away. Even if the stock goes down, you will still be able to make money. Now, let's go over this. Now, guys, this is not a planned presentation I'm doing. Just keep that in mind. This is just from my own experience, which I'm going to tell you as the truth. I'm not trying to sell a book here or anything like this, right? I'm just going to tell you the right things in the market. So I hope things will make sense when I go over these things. Now, let's say, for example, if you're okay losing this $100 account, now let's pull the chart on SPY today. So this is the SPY. Now, can you guys see the SPY chart? Yeah, okay, great. Now, today, a lot of options went from 50 cents. Let's look at the 392 puts. Now, I have $1,000 in my account, right? I only have, and out of the 1,000, I'm willing to scalp with $50 only, just one trade for the day, and that's it. 1 or 2 trades maximum for the day. If both don't work out, I'm gonna call it a day, and that's I'm done for the day. I have $900 left. I want to come back into the market tomorrow. So with $50, what could I be done today? If you saw the market, let's say if you were scalping and you're okay losing this $50, you have high risk tolerance. Let's say if you bought this option, so around $53, 5-10% up and down, which is fine. Let's say you bought the 392 put on SPY today at $53 and you held it. This put went all the way from 50 cents to $3.60. Now we don't know where the option prices will go up to, but you could have definitely played something like this from 50 cents to more than $2. And when you're playing this trade, let's say you make 3 trades and you only get 1 right. 2 out of 3 go to 0. Now, if you're patient in the market, you're making your trades properly, you're well disciplined, I'm pretty sure 1 right entry will give more than 200% plus on your trade. This 200% will cover the 2 trades that went to 0, and that 1 might leave you with a profit. Let's say overall you end up selling 1 trade from 52 at 2. Just an example, from $50 $200, right? And then less the $100 on 2 trades which you lost, and then less your principal on this trade, which is 50, you're still left over with $50 net. Now this might happen in the span of 1 day, 2 days, or 3 days, and now your account balance from here is 1,050. Okay. This is just 1 trade at a time. You don't have like 10, 15 positions open. This is just, I'm only talking about scalps here with a small account that you do, right? Or maybe let's say if you bought a call here, a 390 for a call at 50 cents, or let's say this, for example, 396 call you bought at 50 cents thinking it was going to go up, or the day ended at 23 cents, right? Maybe tomorrow it goes up, I don't know, right? So out of the 3 trades that you would do if you were scalping and you're okay losing money, you're not bothered by it, you're taking your time, you're scalping, you make these $50. Now, if you're not okay losing money fast, what can you do? First thing that comes into the thing is, how is the commissions? On a small account, are you paying a lot of commissions? Because if you have an account which is less than $5,000, I highly suggest you look for a trader that does not charge commissions. I don't know, I think Robinhood doesn't charge, or whoever it may be, a broker that charges no commission. So this is something that you need to look into, okay? How disciplined are you as a trader? Can you sit on your hands? With a small account, you cannot trade every day. I repeat this over and over again. With a small account, if you're trying to day trade every day, you're likely to be on the wrong side more than the right side. Thank you, AJ. So Robinhood and Webull. How well is your discipline? Are you able to sit on your hands without trading? I manage a lot of big accounts. For the last 2-3 weeks, I have been entering very small positions. I did enter 1 full position in Amazon yesterday, which more than doubled, and today it went to shit. I mean, it's okay. It happens. I'm not too worried about it. But how are you disciplined? Are you trading every day? So starting, I think February 2nd or 3rd week, when the market went, started gapping down a lot, like things were not moving well, were you able to sit on your hands? Me personally, after many months, these last 10 days were so, I can't even tell you how boring these last 10 days were. There was nothing to do in the markets. We kept waiting for one direction, right? So do you have the discipline to sit on your hands without trading? This is really important. If you don't, you will lose money. I'm telling you right now, you will lose money. Why? Because you're going to go into trades, which the market makers knows, and they will take away your money. You might be on the right side based on technicals, but tomorrow what will happen, you have no idea, right? So expect the unexpected. Another thing which I saw, comparing your accounts to others, somebody entering trades in the room, for example, somebody might be calling, let's say for a ticker, let's say Disney, somebody's buying Disney calls, and they've been banking, or somebody who's been calling, making calls for the last 2 weeks, they've been on the right side most of the times. You cannot be like, oh, this guy's been making money, let me just follow his trade, maybe I'll make it. You cannot, because you don't know what his account size is. Maybe he's got $200,000. He's just playing with the $500 in the account, and he's just been nailing those trades. And you have $1,000 account, and you're trying to follow his trades, and then all of a sudden he gets one bad trade, and there goes your money. Because a lot of times I do know many of you end up following other people's trades because they've been hitting it, but their one wrong trade kills your account. Why? Because you have $1,000 account, he might have a 100K account, right? And many of you are guilty of this. I already know you know it. Like you do follow trades without looking at the chart. A lot of you guys, I know, right? Don't do it. I'm telling you guys, it's okay to let them trade. Like, I mean, Wish the congrats them, but you don't have to follow trades. Look at your own account. If from $1,000 your account's already at 950 for the day, and there's no clear direction, why are you gonna follow someone else's trade? You only have 950 bucks left. Wait for a day, maybe 3 days, maybe 1 week. Eventually, if you have patience, you will hit a trade which maybe from $1 goes to $1,000, right? Another thing, fear of missing out. This is the most dangerous thing. This is one thing that people lose money in the markets, fear of missing out. You see one green day and all of a sudden you start saying, if I don't buy the dip here, maybe this goes to $3, this goes to 6, 10. It's okay, let them go up. If the stocks are going up, let them go up. You'll get even better opportunities if the market goes in a bull run. Why? Because your probability of being right will increase. So the market is not going nowhere. So don't have this fear of missing out. This all falls under discipline. Comparing your account to others, fear of missing out, and then what the king of all, the most important thing, patience. If you don't have patience in the market, you're again in the wrong industry, right? Trading is not something that you do every day. You do it every day when the opportunities are there, when there's a bull run, when there's a trend, when there's a momentum in the market. But this is not something that you can be like, okay, I'm gonna like if I have my platform open, it does not mean you trade. Sometimes you just have to look at the market, see what they're doing, right? Or maybe do some research. What's happening? Why was the market down today? Even though the Fed gave good news today, but why was the market down? And doesn't do any of you know? Right? Do you know what the TNX symbol is? Right? So let's go over this now. Now that we're talking about this, I'll teach you guys something here. So today, so here I already have it open. When SPY, even though we have some good news, what was the main headline in the market? Well, CNBC, all these people, what did they keep talking about? The 10-year yield. So TNX is another index fund, right? Now, for the last 6 months, it's been going up. So has the market been going up. But all of a sudden, treasury yield has become a concern in the market. Oh my God, the rates are going up, even though blah, blah happened, the market is tanking. We have no idea. But today, when, because this was a thing in the market, TNX, it held up, right? And the SPY dumped, right? Because the 10-year yield was strong. Market is not liking it for reaching highs, right? So you have to stay on top of all these things. And then your size. If you have $1,000 account, $1,000 and $5,000, they're both very small accounts. But if you have $1,000 account, what exactly are your sizes in the market? What position sizing are you playing? Are you playing option contract worth $2? Right? Because if you're playing weekly $2 contracts, now I'm not saying you cannot play $2 contracts, you can. But if you're playing a weekly position, you're basically risking your portfolio to go down 20% within a week, right? If you're gonna buy an option for $2, now let me show you the power of leaps. $2. Let's look at somebody type in a ticker symbol, any. Let me show you guys the power of leaps. Okay, Baba. So here's Baba, right? If you have $1,000 account and you really like a certain chart, right? Now I will also go over the types of plays to make. If you have a small account, your entry has to be right. There has to be legit reasons in your entry. Right now, this is one of the charts. If I had a small account, which I would have played right here, Baba. See the strong support level? It came down here again. I would have played it here and I would have played it right here. If I had a small account, here's what I would have done. I would have at least bought myself, let's say May, at least May, I know. And so maybe at least 2 months in between. Go on all strikes. Let's look at $280 strike, what they were trading at. So right here, Baba as support, these were trading at $2.25. All you had to do was maybe buy one contract and just sit on it. That's it. You had to do nothing but sit on it, because worst case scenario, this maybe goes to $1.50, $1.70 tomorrow. If Baba was to open it with a gap down, or most likely nothing was going to happen, it would have just stayed. But even from 225, this right now is trading at 3. So the high here today was, so $3.81. This doubled. This contract right here doubled. Why? Just for Baba holding support level and bouncing 5 points. That's it. Like, are you looking at these things? So your entry on a small account, If you're looking at a 5-minute chart, you're making a mistake, not a 2-hour chart. At least daily for the entry confirmation, you're also looking at the weekly and monthly, right? So Baba here at this support, so I have a confirmation on daily, a strong support level, good risk and reward. And then I would probably go on a weekly chart. Very strong support level right here, right as support. And then let's look at the monthly to even for more confirmation. And monthly sitting right as support, right? So for a small account when trading, a lot of you guys played Tesla during the week, and I got many messages that you guys got killed. Now Goldman Sachs, he was calling Tesla, he made money on Tesla, but what you guys were doing, he was playing in the money calls, which were $15 or $20 or close to the money, but you guys were buying calls which were 100 points out. Right? His call might be in profit tomorrow morning, but you might be in a loss because you're way further out of the money. You have to understand all these things, right? So you entry the type of the stock that you play, you need to understand why. You need to understand the movement of the option, what it'll do, right? And then again, now that I have $800 left on that $2, and when you're buying leaps, trust me, if you're on the right side, this $2 has the power to go even 20 bucks, but it requires a lot of patience. After entering this trade, I will not enter no other trade no matter what. I'm gonna sit on my hands every day. I'll do something. I don't know, but I'm gonna save these $800 no matter what. I will not spend a single penny out of this until I know the results of this $2. I'm not gonna have FOMO. Oh my God, somebody buying Apple for 50 cents. You know what? Maybe let me YOLO. Let me put another $100. You cannot, right? Let this trade play out, right? If Baba does not move up, it's going down something, maybe, like maybe it comes down to 200 or even here, sell it for $1, sell it for $100 loss, right? And your size has to stay consistent with the positions that you're taking. You cannot be inconsistent. You cannot take a $1 trade to $3, and now your account is at $1,200 from 1,000, and then all of a sudden you get excited, you think you made a lot of money, you go in with a $300 size trade. No, go in with another $100 trade, save $100 profit, have another $1,100 here, go to sleep peacefully, right? Let this $100 play out. If you guys have any questions as I'm talking, please do let me know. I'll try going over them. So number one thing, let's just go over these things. These are the most important factors when we talk about account growth, right? Your account size, your goal and risk level tolerance based on your account size. On $1,000, $5,000, if your tolerance level is low, you must play small and you will require a lot of time. You cannot actively trade, but if your risk level tolerance is high, you have a good job on the side, you're making great money, and you're not worried too much. If this account goes to 2,000, you're okay with it. You'll maybe put in another 2K. Then you can maybe take a little bit of risk for the reward, right? But if $1,000 is a lot of money for you, man, you better, every trade that you enter has to have a legit reason, right? Technically and fundamentally. And then you gotta look at a lot more other things, the trading pattern, the technical indicators, all these things lining up. You cannot just make trades based on whatever. Now, on a $5,000 account, for example, how much do I allocate for options? At a time, I must have $4,500 in cash no matter what. And here, maybe I'll take 2 to 3 positions max, totaling $500. So one position might be 100 and two might be 200 and another $200. Yeah. And all these 3 positions, I will buy time no matter what. Unless my risk tolerance level is high, maybe one, I'll play a weekly position for $100 and see how that plays out. And then these I will hold leaps. Even leaps, they have a great potential. Now, for example, how do you put leaps? On a $5,000 account. Now let's look at a Rocket. Right? So Rocket was a hot shot stock lately. It has dropped down a lot. I want to buy Rocket. I want to buy a lot of leaps. So you know what exactly I'm waiting for right now? A lot of people are buying Rocket at these levels. I'm not even buying it here. I'm waiting for it to fill this gap right here. 19. So $19.90. So I'm waiting for it to come below 20. As soon as it comes below 20, I will load up on these leaps. I will buy the same leaps I sold January 2022. So 23.89. So as you can see, These hit a high of 980 a few days ago, and these came down. These I can probably get them for below $4 if this comes at 19 or 20 bucks. I will leave it alone for a month or 2 months. These will give me at least 50% return, right? Or another stock that I'm looking at right now is Baba. I'm already looking at. I already bought some big leaps. But if this stock comes down again at 210 or even here, if there's more downside around 220, this or 215, this will give you opportunity to play that bounce for small accounts. So I will not even buy it here. Another stock that you guys like is Apple. I would not touch Apple here, no matter what. If you have a small account, I will not touch Apple no matter what. There's nothing telling you to go up or down. There's no reason. There's nothing here that tells you it's going to go up. You might be looking at the support level. If it breaks, it's just going to break, or it might even go up. There's no confirmation here. Palantir, another stock, PLTR. Now this stock is a very strong support level, but I still will not touch it here because it's failing. There's a chance that it can even come down all the way to 20 bucks. This stock right here. If it comes down to 20, then I might add a leap, right? And for a small account, I might play something, not Jan, maybe August 21 calls. So these $25 calls. These calls already went from back from 5 to 23. Now they're trading at $5 again. They might even come back to $3 again, giving you another opportunity to play them. So if these same calls come down to like $3, maybe I'll play for a chance for a $1 move up to $4.50 for a small account. A lot of you guys are getting killed because you're playing a lot of weekly positions. You hit one good trade, but then one trade ends up taking all of your gains. Cannot do that. Now on a $5,000 account, equity plays. If you're trading options on a $500 account, let's say you're paying $500 max, options with time. Okay. So your options have a lot of time. The other $4,500, what do you do with it? With these $4,500 cash, another thing that you could do is you can make some equity plays for small gains. So let's say, for example, let's look at DBX, Dropbox. And let's say we were looking at the setup right here before this move happened to the upside right here. And we see that it's about to break out. This might make a move up. And I'm looking to make a play here, but I don't want to play options because it might be dangerous for me. So what you could do is this stock is going for $25 per one. You can probably buy 50 shares at, let's see the price here. You can buy, I'm just giving you an example, 50 shares at $24, which is $1,200. And you want to put a stop loss here, like a disciplined trader for maybe 23.70-ish. Give yourself 30 cents, right? Give yourself a 30-cent or support, like a 30-cent gap, right? I mean, the stocks do moving up and down. Like it's almost impossible to have a perfect entry that your stock only goes up. Usually the next candle is red, right? And here, let's say you have a 30-cent stop loss, but if it works in your favor, you will end up making $1 to $2 per share. And if you're looking at the proper entry, and just for example, and you might even make $3. Let's say you make this trade, you make a trade like this. At the end of the day, understand the game of probabilities in the stock market, you'll make a lot of money. I'm telling you this right now. You make 3 equity trades. Your first trade, let's say it goes into a loss. It's a total loss. Now you buy this back at 23.70. So your 50 shares at 23.70 are 11.85. You take the $15 hit. All right. You took the $15 hit. Your second trade, again, it's a loss. You hit your stop loss. Again, a $15 loss. For your third trade, you're on the right side. You're on the right side, and this stock maybe goes to 26 bucks. Now this $26, 26 minus 60 cents leaves you with 25.40 minus 24 your principal. You're making $1.50 profit times 50. Are you guys following along with what I'm trying to teach here? Because you net $70 profit on 3 trades. After your first trade is a loss, second because you were disciplined, but the third one, you followed your proper setups. You were patient. You did not jump into other trades, right? You followed your game plan. You are now up $70, right? So you can play equity trades as well. On now, I understand from 45, you're using minus 1200 as your for equity, for example, right? This could be 1500. This could be $2,000 also if you can manage. The only downside risk is tomorrow morning if there's a huge gap down, but that can happen with the gap ups as well. So if you're consistent, you'll make money overall. Yeah. So you net $70 here. Now, some of you guys take money for granted in the stock market because you're just looking at the numbers in your market. Some of you guys are working for maybe $200 a day, right? And if $50 were to fall out of your pocket and you lost it, you'd be stressed out all night. But from your account, a trading account, if $200 go down, some of you are not stressed out. Why? Because it's just numbers on the computer. Guys, that's your money. That's the same money, with the money that you're working outside. The value is the same. So don't take the trading account money, just numbers like, oh, I lost this YOLO trade. It's okay. If you're doing this, you're not going to make money in the market. Every single dollar in your trading account is real money. It's real money that you're trading with. That money, so I was speaking with somebody. I'm like, when you guys buy lunch, it's like you guys are all, sometimes looking at, oh, should I eat this? A $10 meal or 12, like all these calculations go in your head. You want to save money on your phone bill, but then your trading account, you're just taking your money for granted. You cannot. This $70 is a lot of profit on $1,200 bucks. That's a big percentage, right? And that's how exactly you can do some equity plays if you have a $5,000 account. The same thing goes for a $20,000 account, right? On a $1,000 account, it's hard to do equity plays, right? But you can. I'm not saying you cannot. You could, but you have to be very careful with your stop losses. Then go ahead. You can use $500 for equity plays. I'm not saying you cannot, but just make sure you're disciplined. You respect your stop loss. Don't have ego, because one thing that kills people when ego and emotions kick in. Sometimes you won't sell a position. You know why? Because you fell in love with the stock. For some reason, in your mind, your mind is telling you, let this position go to zero. Don't worry about it. You're gonna it might tell you you'll make money on another position. No. If you're not feeling right about that position and your emotions are kicking in, sell that position. You'll feel a lot better after selling. Trust me. You'll have a better sleep. Don't let your emotion tell you that your option is now at 40 cents. Don't sell it. Just let it go to zero. From $2 it's down to 40 cents. Let it go to zero. Why? That's freaking 40 cents, man. Right? Save it if it's bothering you. Save that money. See, on scalping, there really isn't a stop loss. Right? On scalping, what you do is you trade less. You trade less. You will not be wrong every time. You will not be. Just ask yourself of all the trades you did, how many of them went up by so much? Every option that you enter on a $1,000 account, you better be expecting 3 times on it, minimum, at least. So if you enter 3 trades, let 2 go to zero, but that one that will give you more than 200% plus will leave you with net. Makes sense? This 200% will cover these 2 that went to zero, and whatever on top, that is your net profit. Right? But if you're trading, if you have 3 options open at the same time and the market's going down, guess what? All 3 are likely to go to zero, right? So trade one position at a time. That's another thing that you guys need. Many of you guys are doing trades all at the same time. But if the market is going down, it's probably going to take most of those stocks down. So all 3 are going to go to down. So do one trade at a time. One trade at a time, maybe 2 max. But make sure one has time or both of them has time, right? So if you have a small account, the maximum trades that you should have an option in your account is 1 or 2 trades at 50 cents each. No more. That's it. Just 50 cents. Any third position on a small account, you're likely to get killed in the long term in the markets. I mean, you might have a lucky week, all 3 end up going to 200, 300%, but that's going to mess up with your subconscious mind, and the market will only take a week to take all the money back away from you, right? Because with some of you, what happened with some of you, I know the story of many of you guys. You guys took the $1,000 accounts to more than $2,500, and then all of a sudden you felt like a big boy. You had over $200,000 in options in Feb and March just before, and it all went to zero in 1 week. Right, that's all it took, and your account is back to 500, lower than $1,000. Some of you, right? Why? You got excited with the gains. You did not stick to your discipline. Anything can happen in the markets. Not even monthly, just buy some time and keep your position size smaller. On $1,000 account, don't be in a rush to double this in a week or two. Maybe the 50-cent trade that you do might hit $5, right? Save those gains. Maybe increase your size to maybe 70 cents now. And that's what I'm trying to teach you, that tell you guys here. If you're not disciplined, it all comes down to this: your position sizing and risk management. When I say risk management, do you look at your account to see how much cash is in your account? Right? Do you have a 5K account with less than $500 cash? Right? You're doing it wrong. Now, these $4,500 that you have invested might turn into 10K next week, but you're just doing it wrong. It's not going to last too long, because then on a 10K account, you might have $9,000 invested and all will go to zero in 1 week. On a $5,000 account, at least have $2,000 cash, maybe the other $1,500 to $2,000 in a safe equity play, right? And then the rest 500 in options with time, right? Weekly, maybe $100 maximum into weeklies, $100 max in weeklies, no more. That's it, right? No, why, Justin? There's so many options that are 50 cents, right? Now you were talking. So let's speak. So speaking of 50-cent contract, let's go to even let's go to Baba, just for example, just for the heck of it, right? So this is one of the stocks which was a strong support level, right? And this is a big ticker. Or let's go to DVX, for example. Just an example. Now let's look at 23 April calls. Let's look at these $28 calls. They just open these 27. Now these calls right here on DBX. These are 23 April calls. I'm looking at DBX, $27 strikes. If you bought them on 8th March, these were going for 68 cents and they went to $2.60. If you're very picky about your stocks, you can even buy options further out for less money. Let's look at Palantir has IB is high, so they'll be expensive. But this is just one example. I had no idea, but I knew that these options were very cheap. All you had to do was look at the stock. Right here, it came here, a breakout, right, and buy something with a few weeks out for less. And these went to $3. These options. Let's look at another. Give me any ticker. I'll show you that how many tickers, the same ticker, how many 50-cent options moved over to $2. Or even Apple, for example. Let's look at Apple 30 April calls. I'll go to all strikes and I'll show you Apple calls, which from 50 cents moved up to so much. So let's look at the 140 calls or let's look at the 150 calls. Now these calls right here from 53 cents on 12th March, right? 12th March for 53 cents went to $1 on Apple, 150 calls. So even these options double. Not that they don't, they do. Okay. You just have to look for them. I'm not saying to play Apple, I'm just showing that when you buy time, if the stock moves in your direction and you bought the options for less money, even they move a lot, right? But if you buy them a week out, then they're not going to, you will lose money. Let's say, for example, Baba, right? We're back to this stock again. And we bought the options for 18 June. Let's go on all strikes. Let's say the 320 options. Let's see what they were going for. Okay, so not these. This is not the right option I would do. So their low was $1.39, their $1.70. So not these. Give me a ticker symbol. Let's go with the Walmart. Okay, Walmart here as support level. If you were to look for this setup right here, when me and T, we all jumped in Walmart. Why? Because this is a legit entry, good support level. Dow was really strong. Now let's look at 16 April Walmart monthly calls. Now let's look at the 140 calls. So these 140 calls went from, so right here, they were trading at around, so their low was 66 cents. And after a day, they went up $1.61. So almost 200% in 3 days. So you have to be very picky with your options. Right? And yes, Harman, so commission kills you. So for small accounts, right, you have, I mean, get a broker which does not charge commission or is really low on commissions. So you have to be very careful. No, AJ, if you on a small account, avoid lottos. You just can't. Anything, if your account is under 5,000, avoid lotto. Why do you want to play them? Right? You're not in a casino unless your risk tolerance level is high and you agree with it. Take a small position for 50 to 100 bucks max. Otherwise, avoid. It's not for you. Just don't do it. And if you have a 20K account, a $20,000 account, you want to play lottos, no more than $200 to $300. Some of you on a 20K account are doing $1,000 in lottos. You guys are crazy, man. I don't know what to say, right? But so AJ, I mean, if anyone that with a less than a $5,000 account, in my opinion, avoid lottos. It's not for you. You shouldn't be doing them. You really shouldn't be doing them, right? Like your position sizing on small account. I'll repeat this again. Your entry has to have legit reasons why you're buying it. If you don't have a legit reason for it, don't buy it. Do you agree with the chart on daily frame? Do you agree on the weekly frame? Do you agree on the monthly frame? Right? How about the sectors? What's the market saying? How's the market sentiment? So all these things have to, there should be a check mark. Tomorrow, you might be on the right side, though probably goes up a lot and you didn't buy it. It's okay to miss. Some of you guys have fear of missing out, which kills your account. It's okay to not to trade. On a small account, you cannot and you should not be trading every day, in my opinion. Like, honestly, you should not be. There is zero reason that you should be doing that. If you are, you're doing it wrong. But you should be watching the market every day and learning every day. And I hope you're also working on the side because, to take care of your bills. Well, even with $1,000, $5,000, you could do a lot in your account, a lot, right? Ravita Money is in here. He took $1,000 to over $2,500 in less than 3 months, which is huge in my opinion. Like, that's a lot of success. So if you take $1,000 in 3 months to $2,500, based on the same consistency, same place, he'll probably take his $2,500 to over $7,000 in the next 3 months. So in 6 months, he's at 7,000. Maybe this account in the next 3 months, he takes it to I won't multiply by 3, but let's say 100%, 14,000, right? Eventually, your trading will go exponential if you stick to consistency, but it's not going to happen overnight, right? Take your time. Eventually, you'll get there. Okay, so there you go. So 500 to 5,000, and then you lost a lot of it, right? So go back to yourself, how you turned 500 to 5,000. And at that time, the market was strong, things were moving up, everyone was making money. And then all it took for the Fed or the market makers was 1 or 2 weeks to take all of your gains back. That's it. That's it, right? Any questions, guys? Anything else that I can cover here? What can I like? Let me know. See, looking for options. First thing you want to learn is what the Greeks are and what exactly are options, right? What exactly are options? If you're still vivid, if you don't have a proper understanding of what the options are, I highly suggest that you look into them and why do they move and why are they priced at the price they're priced at, right? There are a lot of tutorials on YouTube that you can watch. Keep watching them. Some of them you might not like, but some will make sense. And then you got to apply the knowledge practically and see. Yeah. Yeah. But learn the Greeks, right? And then another thing, when entering options, are you looking at the options charts along with the trading chart? When I say options chart, are you looking at the options pricing history, right? Just to understand what these options were and what they're priced at now. So some options, they come down a lot and then they're selling at a discount. And the same options were probably $10 like 2 weeks ago when the stock was high, but now the stock's at a strong support level. You're still buying time and those options will move up a lot, right? And on a small account, do not average down, okay? Instead of averaging down, buy time and buy closer to the money option, right? At least if it does go in your favor, you make money on this anyways. Okay, because some of you guys average down at the wrong time, right? Most of the time you should not be averaging down in options. There's no way. Like 9 out of 10, you should not average down. Better to buy something closer to the money and buy more time instead of the same position. Unless it's a 2022 leap. Now, for example, now I have this leaps right here, AMD. A lot of you guys know I posted a whole scenario why I chose these leaps. So Jan 2022, I have these leaps which I'm heavy in, right? So I've got the $100 no, I got the point 319. Yeah. So I got these AMD leaps. I paid around $20, $21, $22 for these leaps. And right now they're trading at $12.50. I am not going to average down. A lot of people messaging me, Ricky, are you averaging down on your AMD leaps? The reason I'm not going to average down because these can probably go a lot lower, maybe even back to 1090, maybe even down to $7, $8. Why am I going to average down later? Right now, if the stock moves up, back up in my favor, I already have a position. Let them come back on their own. I don't need to average down. If I do average down, I want more confirmation from the market. I want a proper bottom. I don't want to average down here. Maybe so. Let's look at the stock. I have until 2023. The next support I see on AMD is right here. So 73, again, it might make a double bottom here, right? If I was to average down on these options, I'll probably do them right here, around 64, 65. If AMD hits 63, 65 in the next 2-3 months, which is possible. Some of you are like, what the hell, AMD at 63? Yeah, I mean, it's a stock market. There's no guarantee that this is going to go up, right? I can see this coming down to $63. If it does come down to these levels, that's when I will average down on these options. And then when the next curl up happens, I will probably be at a break-even point, and then I'll see, do I want to hold them or do I want to sell them? Yes, Joseph, but if you average down, only if the stock starts moving in a direction right away, you will make more money. But here, I have no reason to average down so fast. Why? Because there could be more downside in the next 1-2 months. Okay, so for example, so somebody messaged me direct saying they have NEO calls. So they have NEO calls Jan 2022. So Jan 2022, $35 calls they have. Oh, sorry, $40 calls. So you got that NEO. So you're right here. You're almost double on these calls. We actually almost doubled. So I hope you sold half if you didn't. But NEO, if it keeps moving up, I think you can make a lot of money. But then again, the market is choppy. These can come back down to these levels again. The only thing I can tell you, you're up a lot on these. You bought them right at the bottom, right, with a lot of volume came in. The only thing I can tell, just manage your risk here. Don't let them go below maybe 10 or 9. And it's better to exit with a profit, or you can just write them, see what the market does. But do have a stop loss on your profit on these because you might even get them lower than. Yeah. Yeah, Carson, you can definitely trade equity, but the thing is, when do you buy? What do you buy? Right now, for example, Clove, for example, one of the stocks, right? I love this stock. I do have some equity in the stock, right? But I no longer like it after the earnings. It wasn't too great, so nothing exciting here no more. I mean, Chamath, his name hype is a little down. He's down himself a lot too. But this stock came all the way down here. I was thinking of averaging down, but I didn't do it. Why? Because this can even go to $5. They can even take it to $3, $4. I've seen this happen in my life many times. Great companies with great backup. I've seen them go from 15, 20, and then back to the $2. I've seen it so many times. Same thing can happen with this as well. So I don't know, like this stock right here, I would not buy it, but like on equity, it depends. You want to play some really solid names, right? Like for example, a Zombie VN is a small, but this company has a lot of news coming in right now. A lot of research has been happening. So this is where, as for a small account, you can probably use some equity here. Maybe if you have $1,000 account, maybe $150 to $200 worth of equity here with a stop loss. It's trading at 77 cents here right now. My stop loss would be 65, 60 cents. 15 cents, I'll give a gap, which is it's a huge percentage. But if this works out, this is likely to go above $1.20, $3 in the coming months. Kevin, on a small account, it depends. Now, if you have a $5,000 account, I recommend maximum 10% options, right? With time, not weeklies, don't lotto with at least 3 positions, I think, right? Or maybe 2 positions max, $100 each. And then you can maybe use $1,500 for equity at a time, right? In which, even if you're able to find a good equity trade, and even if you make a 3 to 5% move on this, on the right side, you can make anywhere between 60 to 75 bucks, right? Just like I went in the previous example, right? So on equity on $1,500, just for example, I mean, you can have on 3 trades, you can hit your stop loss on 2 trades, let's say 30 cents, for example. But one trade, I mean, if you're really picky with your trades, then you're doing a lot of research, one trade will eventually give you more than a $1 plus move, which leaves you with net overall, net profits, right? That's how you gotta keep calculating. But if you're doing it in a rush, you have FOMO, if you're missing out, you think the market's gonna go up, you're gonna be left behind, then you're likely to lose money in the markets. So you got to be able to sit on your hands. With small accounts, you cannot trade every day. Put this down in front of you. You cannot trade every day with a small account, right? And your position sizing, you have to be very picky. When I say very picky, like everything has to be a confirmation. If you're just doing it with a gambling mindset, like, let me just take it. Like, I don't want to sit here. I don't care if I lose this money. I'll put more money in. The market is likely to take the money away from you. The way the algos are programmed, they're programmed to take money away from the smaller fish. They're going to eat you. That's it. Right. But any other questions that I can answer? Because everything that I'm saying is just right out of my brain, like according to my experience, right? And this was not planned. So let me know if you guys have something that I can help answer. What do you mean? In regards to, yeah, so $5,000 account, not much of a big difference. I mean, it's the same thing. If on $1,000 you're doing $50 trades, on 500, on options, the maximum out. Now this 50% on $1,000 is a 5% of your account. I'm not saying to do the same thing for 5,000. On 5,000, maybe you want to do $100, right? But see, at the same time, in options, you have to be realistic. I cannot tell you to buy $20 options on $1,000 account. I mean, 50 you have to be, so one trade at a time, and let it play out. Let it play out. If you follow this rule, out of 3 trades, I'm pretty sure, I mean, if you're fine with your entries, you're doing a lot of research, you will hit one entry, which gives you more than $1.50 plus. It covers your loss plus leaves you with net. This is very hard to practice, this right here. One trade at a time and sitting on your hands is the hardest thing to do. Why? Eventually, you're going to come across a chart, it's running, moving, you think you can make money, this, that, blah, blah. That's where the discipline kicks in. So if you can have the discipline, just let that one trade play out at a time, you'll make money. Maybe your first trade makes a good move. This goes to $2. And now you're even more relaxed. You have $1,200 in your account. Make that one trade again for $50 until you grow your account. Right? And when your account reaches $1,500, maybe increase the size to $75 per trade so that your delta goes higher, so that you can maybe make more money. Again, one trade at a time. Right? On a $5,000 account, if I was to stick with the same rules, maybe $200 max at a time on options. Because that $200 will go to 6 on one of the trades if you're on the right side. No, see, on $1,000 account, you cannot be like, I'll put $100 into options and 900 into equity. Then you have zero cash. You're all tied up. What you could do is, I mean, if you're putting $100 into options, one to trade at a time, out of the other 900, with a very tight stop, I can probably use $400 to $500 for equity play, but then you have to be very disciplined. If it hits your stop loss, you gotta take it, right? On this, if I'm putting $500 into equity, I'll have to give some room for my stop loss too. Why? Which is very possible. Maybe I'll have a $25 stop loss, right? And then if it goes in my direction, I want to make at least 50 plus profits. Yeah. So you got to work on the probabilities and numbers, how you play with these things. It depends how much money you're putting in. There's not really a percentage. You look at the chart technically and see what the support levels are, right? Me personally, if I buy equity for long term, I don't really look at them. I mean, I bought it, that's it. Like I don't look at it. Harman, it really depends how much money to have in your account until market clarity. I mean, if you have a job which is 100K a year, for example, right? You can have 10, 20K in the markets, no problem, because why you have monthly income. But if you have no income and you have your expenses, all these things taken, which I don't know. It's the amount which you're comfortable with. Well, right now the market has no direction, so you want to be cash as much as you can and take one day at a time. Trade small in this market right now because there is no direction. The way the market is working right now, they're doing it to kill all the people that made money from April till December. A lot of people who had no idea what trading was, they made a lot of money from April till December, right? They made a lot. Why? Because everything was just flying. And now they're going to take that money away from the same people. So you got to be very careful what you do, right, in this market. So if your size, it really depends. See, watch list, for example, my watch list is right here on the left on Questor. I don't know if you guys can see. So I've got FedEx, Goldman Sachs, Home Depot, JPM, Baba, IBM. I do follow a lot of tech, Bank of America, CCL, Uber, Store is one of my favorite stocks. It pays good dividend. It's a real estate stock. McDonald's, JD, INTC, DKNG, Walmart. My watch list is all the big names in the market, the big boys, basically. I trade mainly blue chip stocks, as you guys have seen. I do trade equity on some names, which because the return is just very high. But for equity, it's all the big names, bro. And mainly tech, right? But tech has been really shit for the last few weeks, as all you guys know, right? But you want to have banks, everything on your watch list because sometimes certain sectors are moving and certain are not. Okay, so Ricky, I got Tanuj, you're okay. Yes, Tanuj. So if you have if the market goes bullish now and you have the Apple 125 calls, and let's say for example S&P Dow, right? They all rip up too. That will also add premium into Apple. Apple, why? Because when the sectors are strong, the market makers hold premium in the stocks as well because it's likely the stock will also move up. And if the stock's moving up, yes, the premium does get added, right? So yes. And Ginger, brother, for creating the watch list is basically just the stocks or the companies that you follow and that you can get comfortable with. Like you mentioned Nike to me once, that Nike is going to come up with a 5G plan, right? And I played Nike based on your news that you sent me, and I actually made good money on it. So you gave me Nike, no, sorry, not Nike, Nokia, and okay, Nokia. So I was speaking to you right here that day when you messaged, right? Right here on this day when we bought Nokia, and look at the jump it did. Now this I know with GME, AMC, all those things were involved, right? But still we made good money on it. But Nike, I think is a great long-term play. Why? Because they're going into 5G with they're getting some deals. Right now it's down. I would wait for it on this Nokia. Sorry, I keep saying Nike, it's Nokia. Nokia, I would look for a $5 break because I think if I can get a $5 break, this name can get going. It can actually really go high if they can get back in the system. But let's see. But it's a name that does not move a lot, so very small position if I do buy it. Got anything else that I can cover? Some questions that you might have. But more than trading, these are the things that I covered. These are the things that you want to write down. I'll just go over them very quickly. Right, with your account, I was writing them here. This is what you want to look up. On your account, is your goal realistic? Just ask yourself, is it realistic? Right? And then what is your risk tolerance level? Is it high or low? If it's high, you can trade a little bit more because you know that you might end up losing. So you should be happy. I mean, you should be okay with losing money if your risk tolerance level is high. And if you want to turn 5K into, for example, $20,000 in 6 months, and I ask you, what is your risk tolerance level? And you say, no, I can only lose $1,000 max, $1,000 loss max. I cannot help you. Your goal is very unrealistic. There's $20,000 that you're trying to make in 6 months off 5,000, and on $1,000 loss max is your risk, and you cannot do more. I cannot help you in this trading world. Your risk tolerance level, if you're trying to quadruple this money, should be at least 4,000, 4,500 bucks, or at least all of it. Right? That's the reality of the market. Right? But if you tell me that in 6 months you want to make from 5,000, you want to make another $3,000 on top in 6 months, you're swing trading, you're not sitting on a computer all day, I'd say it's realistic, right? It's realistic. With $1,000, $2,000 loss max, you can. You basically buy good leaps at a good time at a discount when the stock falls and the market is strong, sectors are strong, and you're buying good support levels. All these things kick in, right? So what exactly is your risk tolerance level? This is one thing that you should all ask yourself, right? Commissions on a small account. So somebody said Webull and Robinhood, right? They don't charge commissions. So these add up a lot. Discipline, right? So when it comes to discipline, don't compare your account to others. Don't worry about what others enter. It's good to share knowledge, what we're buying and selling, but then you want to do your own DD as well. You want to look at your entries. You want to look at the charts that, do you also agree with it? Does that position go into your account size that you have? Can you buy it? Can you afford it? Or do you already have a position and now you're just trying to force a trade because somebody else bought it because they made money on the last trade? So that's where discipline kicks in. And a lot of patience is required. Size increase on $1,000 account. After doing $50 trades, let's say you take your account to $1,500. Now maybe not confirmed, maybe I'll increase my size to $75 per trade. Maybe, it depends. Okay. So as your account grows, slowly you increase your size, but consistency remains the same. You don't go out of the hands. Don't get too excited just because you made 50% on your account. Market will teach you a lesson in one day. I'm telling you guys. Respect your stop losses on equity. On options, it's hard to play stop losses. I personally don't. If you do stop losses on options, it'll be very hard for you to make money, according to my experience. So on options, if you make 3 trades, right, you should expect at least 200% on each of them, so that if 2 go to 0, one that goes 200% plus covers and leaves net, right? Now, another way of looking at this is, maybe out of the 3 trades, 1 will go 75%, the other might go 125%. I don't know, I'm just giving an example, right? So when you trade options on a small account, make sure they're likely to work out and likely to give high returns. Don't just buy any random option in the middle of the day. Don't do it, you will get killed. Leave your ego and emotions on the side. If you trade with ego and emotions, you will not respect the market. You will give your account to market makers. I'm telling you this right now. They will take away your account and your money. If your ego and emotions kick in, you will not be able to focus. You will not be able to trade. You'll make dumb decisions. You will want to buy an option today thinking that, I'm going to recover all my losses. I want to recover them this week. Just don't do it, right? There's no reason to do it. Why? Because you should have managed all this beforehand. Ego and emotions should not kick in your trading, right? Does this happen with me? All of these things, even today, I have a hard time dealing with sometimes. Trust me, I do have this is the hardest part in trading. More than charts and looking at price action, this is what counts the most. Even I have trouble following this. Trust me, I'm telling you guys, it's reality. Everyone does, not just me only. But if you can control it, you'll make money in the markets in the long run. Stop losses on equity. There's something called SL or stop loss when you put the order in, right? There are different things. Just go on your broker's tutorials, they'll teach you. If I buy the equity at 24, I can have the stop loss set at maybe 23.70. So if the stock comes down to 23.70, they'll hit my stop. But see, when you put the stop losses in, sometimes the stock will go to 25.50 the same day, and then same day it'll come down to 23.70. So if you're day trading with a small account, you got to keep an eye on this all day, basically, right? Because this might actually hit your target, and then by the end of the day, you might hit your stop loss, and you might be like, what the hell happened, right? So these are things that you need to look at. Oh, Shiva, so stop losses is, for example, let's say Nokia, for example, if I was to buy equity here, My stop loss on this would be the recent low. The recent low is 375, and I buy this equity at 391, thinking that it's going to go back up. So this is one of the stop losses I was set on this stock, 375 as the recent low of 4th March. Because if this was to take this down, it probably likely goes higher. But at the same time, it might bounce from here. So I don't know. But I'm going to respect my strategy. Why? Because my game plan is to be on the right side once and make maybe 30, 40 cents and have, I'm okay to give this up. So if the stock's trading, so let's do the math here. So the stock's trading at 391, right? The stock, let's say I buy 100 shares at 391, costing me $391. And then my stop loss was 375, and I make the stop loss 374, 1 cent below. Or maybe I'll give myself a little bit more question. I'll give 21 cents. And I set my stop loss here because sometimes they'll just flush to take the stop out. And now I end up losing money. So I lost 391 minus 370, which is $21 loss. I do this in 3 trades, for example, right? On 3 trades, I've lost 2 trades, hit the stop loss, hit the stop. So this is all math. I lose the $42 loss, but 1 trade goes in my favor. And you know, when I'm writing this, it's just not, you're not entering random trades. You're entering proper setups so that your probability of being right is high. It's not just entering 3 random trades with, okay, I'm gonna get 1 right. No, this is not a casino. All 3 trades have a legit reason why you're entering into them. So let's say 1 trade goes in my favor and this goes to 475, right? I get that run. So now I make $475 in total. So 475 minus the $42 loss, which equals how much? 435, 430, 425. Let's do some math. So 475 minus 433. Yeah. So 433 minus 391, my principal, right? Which is $42. Yeah. So I end up netting $42 net in 3 trades, right? And this, depending on your account, you can have 1,000 shares, maybe 10,000 shares. I don't know. I'm just going based on if you bought 100 shares as equity. So I hope does this make sense? And all the 3 trades that you did your research, you did your DD, your technicals, fundamental, you looked at the market sectors. It was a confirmed trade. It was not just something randomly that you entered, right? So if you do all those things, your probability of being right will be a lot higher. And out of 3 trades, you'll probably get all 3 right then. So here I'm giving you on low probabilities basically. So on small accounts, you have to be very picky with what you're buying. Are you guys finding this helpful? I mean, great. And another thing that you want to ask yourself is the first question that I ask when people call me, what is your trading style? Do you guys have I mean, what do you trade better? How do you trade your trading style? For me these days, personally, what's working for me the best is buying far out, closer. For example, like for me, what's working for me now is, let's say for example, Baba, right? I bought more leaves at 2023. I bought the 250 calls. Now I got these at 45 bucks, right? I bought them here. I think I bought them yesterday or the day before, I think. Today they hit 51.90. Baba only moved, I think 5. Now I have these are bought in my big counts. So I know a lot of you guys cannot buy these, but this is my trading style according to my accounts, which I have. For me, buying leaves has been working a lot. They have been working a lot for me. I've been making a lot of money by doing these and the leaves. And if the market was down, but my leaves were okay. Even if the market had come down today, these leaves wouldn't have lost a lot, right? Because they're already, the way they're trading here, there's a very attractive price for Baba, right? So I bought these on 15 March with this green arrow that you can see, right? And so they went to 52 bucks. So from 45 to 52, and I have 2023, another 2 years to go. And let's say market settles, Baba might settle here for a few more months, but when the market turns, these are going to go to 70, 80 really fast. So for me, this is what's working. I'm buying further out calls closer to the money, right? What is your trading style? Have you figured that out yet? You should know. For some of you, scalping might be the way. For some of you guys are playing a lot of Riot, Mara with the Bitcoin, and you guys are making a killing. I see it, right? So have you figured out what your trading style is? What fits you the best? It's really you should definitely study yourself also, get to know yourself. Don't be all over the place unless you have big counts. Then it makes sense. Otherwise, know what your trading style is. So yeah. And I'll do another session on now. This I did on $1,000 to a $5,000 trading account. More than speaking about trading, this was more about the mindset that you have, right? Because once you have these things figured out, there's nothing that can stop in the markets, that I can guarantee you. That's all it requires. Any job, even if you're in the military, anywhere you are, it just requires a lot of discipline and all these things, that you can compare. So Kevin, the way to find those trades are the stocks that will move a lot, right? Stocks that will, so for example, IBM, right? This stock doesn't move a lot, but recently it's been in a very, and I mentioned this in a group a few times, it's been holding all these levels for so long now, and I think it's gonna break out soon, right? And it's been strong. It has not been giving up the gains lately. And why IBM? Now, not just technically, but they're doing a lot of advertising for their cloud and whatnot, and they're getting some new contracts. Now, this is my additional research with my technicals. That's now the fundamentals kick in. Okay. Now, these calls, for example, 130 calls, I was gonna buy it today, but then I just missed my entry. Now you look at the volume as well. Also, I've been out before, and look at the volume that came into IBM today in the 130 calls. Okay, if you were looking, you just have to scan a lot of stocks, but these 130 calls were trading at 14 cents. You see all this volume that came into this at 14 cents. The stock was probably trading at 128, 127 at that time, as somebody was buying thousands and thousands of contracts. And then technically it was well set up. And today these went to $1.30. So from 14 cents to $1.30, that's almost 1,000% jump. I'm not saying sell, like, wait for 1,000, for these people that bought it in at 20 cents, 30 cents, 40 cents, they probably sold it for more than a double. So look at the option volume that's coming in when you're buying it. Are there big buyers here? Because these buyers confirm, they give you an edge over the market because these guys know something that we don't. Right? Or you can play names which are like, for example, I'm not saying buy Palantir, I'm just saying, for example, stocks which are less than $30 or $50 per share price, they trade cheaper. Like for Palantir, for example, let's go to next week, just an example, right? So next week's $25 calls are trading at 84 cents. 26 is 55 by 59 cents, right? So even a lot of volume came in these today. Oh wow. No, this is on 14th March, so not today. Yeah. But these are trading at this. But I'm not saying buy these. I would not buy these right now because technically it just looks ugly. There's nothing that I like about this chart here. But maybe if it comes down to the support level, it makes a reversal. I'll take my chance 2-3 weeks out on a 50-cent contract, which will have a potential of going 80 cents plus or even $1, even $1.50 or $2. Make sense? Now, some of you guys might be like, okay, so if we buy a 50-cent contract, it goes to 80 cents. But then Ricky said sell it at 3 times. No, it depends on your account. Now, let's say, for example, if it's your first trade that you did on $1,000 account, on $1,000 account, if it's the first trade that you put $50 into, and that 50 goes to, let's say, 90 cents, I will immediately put a stop loss at 80. I will watch it. If it hits 80, I'm going to sell it. I'm going to lock in these $30 and bring my account to 1,030 right away. Make sense? So that's how you do it sometimes. So you just got to do a lot of math and a lot of probabilities. But again, what is your trading style? So guys, I hope this helped. I tried explaining as much as I could, but at the end of the day, it's more about mindset. Following these, if you can follow these simple steps, you'll make a lot of money. They're simple, but the hardest ones to follow. And so I think we'll call it here. I hope you guys picked up something here.
Ricky, I got one more question for you.
Let's go.
In regards to like scalping, So let's say you're scalping, you went in for $7, right? Is there any way like I can go for lower, or does like that change the Greeks up, or how does that work?
Sorry, what do you mean? Can you repeat
Like,
that?
like for instance, let's say you go in for $7, right?
Mhm.
Which is $700, right? And then I go in for I
Oh,
go in lower.
okay. So see what you're now.
The Greeks playing
They
differently.
do, they do. If I'm going in something for $7 on a lower time frame, like a weekly or 2 weeks out, I don't recommend that you buy something for $1. Why? Because just an example I'll share. Let's say Amazon. Let's say I bought these calls for next week. Just example for Amazon, I buy something. Uh, I bought these calls for. So I bought the 3225s for $7, for example. Okay. These will probably move a lot more than if you bought something for, you're buying something for $1, which is 200 points away, 34.10, 34.15. If Amazon closes at $3,300, let's say on the last Friday of these options, I will probably make $70, $80 on my call, but your call is just going to go to zero. Like it's going to be worth nothing. So no, I highly don't recommend that you do that. Make sense?
Definitely makes sense.
Yeah. So like I said, on a small account, you have to be very picky with your trades, what you play. You cannot just play each and every single trade that's posted. Sometimes it's better just not to play anything if the market does not have a traction. Why? Because you're likely to force a trade. Follow the thing that I said. I mean, this is very helpful, right? One trade at a time, and trust me, you will make money, but it's just going to require a lot of patience, right? And when the market is in the right direction, even your 3 trades, or let's say you make 10 trades, you're likely to be right 4 out of 10, which will give you more than 200%. So do the math, look where your account will go then. Here I'm saying 1 out of 3. I think you can be right 3 out of 3 or even 2 out of 3 if you're very picky with your trades, if you're confirmed about your trades. But most of you guys are just jumping in every day thinking, I mean, to recover your previous losses or whatever it may be. Just don't do it. You will lose on your accounts. So be very picky, have patience, and learn the market, see what's happening in the market. Why is the market going up and down? Like what's causing the SPY to go down right now? Right? Yeah, so boredom trade. Sometimes you're sitting there, you see a setup, you might go, oh my God, let me just buy this. Some news comes in. Nah, don't do that, man. Right? So have discipline. Cool. All right, guys. I think we'll call it here. And thank you for attending. I hope even if you picked up one thing out of this, right, that's a win for you and me. Just one thing. And we'll see you guys in the markets tomorrow.
Thank you so much, Ricky. I appreciate you, man. God bless.
God bless.